real estate is for everyone, but not for the faint of heart. If you're interested in getting involved with real estate, study up and do your homework. And if you do that wisely and correctly, you will be successful.
Today's guest is an experienced real estate investor and the founder and CEO of Belwood Investments, a fractional real estate investment company specializing in luxury fix and flips. Welcome to the show, Bo Belmont.
Pleasure to be here. Thank you for having me.
Bo, tell me what sparked your passion for real estate investing and how did that lead to founding Belwood Investments?
Sure, I'd be happy to. So early on, my mother was a real estate broker, and she used to let me tag along to some of the developments that she was participating in. So I was able to basically, from a very young age, watch homes being built, meet with contractors, meet with the mortgage lenders, really meet with everybody that was involved with the transactions. And it just gave me a bit of an interest in it. But it wasn't my overall goal. I actually was focused on sports, and out of college or in college, I was given the opportunity to work at a mortgage chain called AmeriQuest Mortgage. And that kind of sprouted some more interest in real estate, kind of reignited that interest. But it wasn't until the market crash in 2007, 8, where I found my interest in fixing and flipping homes. It wasn't as popular as it is today. As a matter of fact, it wasn't popular at all back then. So I was able to basically learn from a mentor on how to take some of these these horrible looking homes that were in tremendous disrepair, reinvent them or reimagine them and restore them, put them back on the market and make money from it. And so that's really what sparked my interest, was the market crash and seeing some of these homes that I was lending money to. Now that, we'll give you a perfect example. The home that I purchased initially, the first flip I did a loan right down the street. And the loan was for about $500,000 and it was for a refinance. And this same home I was able to purchase for less than $200,000 now that the market had crashed. So
Oh,
I
wow.
knew that there was a massive gap between what the market could be and what it was and what it had dropped to. And that there was going to be a happy medium in between there where I could buy this home, fix it up, and sell it. And people would still feel like they're getting an amazing deal because they would be paying far less than $500,000 and the home would be fully renovated. So that's really what sparked my interest. I did it. I took the leap of faith and did all the work myself and was able to sell the home, turned a great profit. And that's basically what started that was the inception of Belwood and the idea of my business platform.
That's a cool founder story. In entrepreneurship, unexpected challenges are just inevitable. Share a curveball or two that you faced in your career and how you turn those experiences into valuable lessons.
So in the process of fixing and flipping homes, we encounter tremendous curveballs. Some of those are with contractors themselves. Some are dealing with financing. Sometimes we're dealing with the county or city. Could be natural disasters. I would say some of the most difficult things we've dealt with are a market adjustment, and where have been able to we've needed to pivot from a seller's market to a buyer's market or to a unique market like what we have right now. I would say this current market in which we're in is the most difficult situations that we've been in. So we had to implement early on a system in which we could pivot when faced with a type of market that we're in right now. Because what I like to tell people is that it's not a buyer's market, it's not a seller's market. Everybody thinks it's their own market. Buyers want a great deal and sellers feel like their home is still worth a lot of money. And it really stems from low interest rates back during COVID, where interest rates dropped to 2%. People still have that in their mind that interest rates could still be there at some point in time, even though we both know that's not likely going to happen. But it's still fresh in their mind. So again, we have this unique market where it's fairly stagnant. Folks are quick to make a decision, but people like us who hold on to real estate investments, the clock with the mortgage company that holds our mortgages, they don't care which market it is in. They don't care. Their mortgage is due on the first of every month. They don't care if there was a loss in the family, if there's a natural disaster. It is what it is. The banks are very consistent. So we had to implement a system to take our fix and flip programs or process and pivot to long-term or short-term rentals. And then in doing so, cycling out short-term investors with long-term investors. So we planned for this method before the market shifted, but now that this market is here and that it is fairly slow, implementing this system has been difficult. So I would say, the current market is the most difficult thing that we've encountered. Of course, we've encountered issues with homes, with foundations. We've encountered theft and vandalism. We've encountered, difficult contractors. We've encountered all of that. Difficult working with the city of Beverly Hills, the city of Malibu. They're not the easiest to work with. But at the end of the day, there's still forward progress. We have a product. Our product is for sale. If it's not able to be sold, then we have to be able to pivot to renting it. So that's basically the most difficult thing that we've encountered is market adjustments and how to acclimate to those.
That's really insightful. With over 1,200 transactions under your belt, what do you believe is that single most critical factor that's contributed to your success?
I would say the most critical component is planning for the worst case scenario. Okay. Now we don't want that to happen, and we do everything in our powers to make sure that doesn't happen. But if you don't take into account the worst case scenario, then you won't be protecting your dollars or your investors' dollars. So in our situation, which I was just explaining, we plan on not being able to sell the home. Right. That's the worst case scenario. If you're buying a home to fix and flip it and sell it for a bunch of money, what's the worst thing that could happen? Well, you spend a bunch of money on it and now you can't sell it. So what is plan B? Well, plan B is it's a rental. Okay. Now, if it's going to be a rental, are you going to be able to cash flow? And if you're going to be able to cash flow, is it going to be a short-term rental? Is it going to be a long-term rental? Now, these are some of our underwriting guidelines to ensure that, yes, if we're not able to sell this home and we refinance it, will we be able to put in a renter to satisfy the mortgage and give some sort of profit quarterly to our investors? And then when the market does turn, which it always does, the market is very cyclical. When the market does come back, we're able to put it back on the market and sell it for profit. And that way our investors have a long-term investment plus an equity shot once we exit the property in 3 to 5 years. Along the way, we do have benchmarks. If we do hit our benchmark, which is typically 20% greater than what we were originally going to sell it for, if that happens in a year, then we exit. If it happens in 2 years, then we exit. But we typically see this market adjustment in 3 to 5 years. And that's where we would like to implement these types of underwriting guidelines with everything that we purchase. So I've never lost a dollar on an investment property. We have 0 investors that have ever lost a dollar. We have always been implementing this worst case scenario system, which we do keep about 15% of our properties. So 85% we're successfully able to exit and, turn a profit for our investors. And then for those 15%, we hold on onto those in our rental portfolio. And our short-term investors are cycled out with long-term investors. Some investors want to be in something for 3 to 5 years, and some investors want to be in something for, 6 to 10 months.
Tell me more about your B52 investment model, how it works, and how it simplifies real estate investing for both beginners and experienced investors.
Sure, I'd love to. So, as I was saying earlier about when I was able to get into flipping industry in 2007, 2008. Some of my friends were watching what I was doing, and they were seeing that I was taking these homes in disrepair, renovating them, and selling them. And they wanted to be a part of it. There's been an interest in this for many years. Just the access to it's been very difficult for anybody to participate. But I took the leap of faith and I did it myself. But like I said, it gained the attention of many of my friends. And so in 2008, I decided to offer my expertise to my friends. And I said, if you guys would like to participate in this, then we can partner. I'm going to do several of these flips on my side. On the side, you can do one with me over here, and we'll split the costs and we'll split the profit, and we'll see how that goes. Well, that went really well. That's kind of a typical joint venture agreement, and that sprouted basically the idea of Belwood. So eventually, I started having more and more friends and family come to me wanting to participate. We were making great money, and it was expanding tremendously. Pretty soon, I had several hundred people wanting to participate in our flips and becoming a part of the system. And I needed to introduce some sort of technology. Because as you can imagine, if we are doing 50 flips at one time, it can be rather exhausting responding to so many people when they want to know what's the status of the flip. Did we get a new roof? Is the flooring done? When's it going to market? Is it in escrow? When do I get my money? Is the most important question they ask. So what we did was we set out to make an application. And this application gave us the opportunity to do several things. One, it was the opportunity to present an opportunity to our investors. So we're sourcing real estate deals from realtors around the United States. They bring them to our attention. We vet them. We put them through underwriting, and once it passes, it goes up on our app. Now, one of our 6,000 investors are able to look at that property and determine whether or not they would feel comfortable investing in it. But now, like I said, we have 6,000 investors, but we don't have 6,000 homes that we're flipping. So then was a kind of a paradigm shift where I realized I can take these partnership deals and fractionalize them. Instead of just partnering with one person on one transaction, I can partner with hundreds of people on one transaction rather than having our portfolio of investors wait on the sidelines for their turn to invest in a property. So our application gave the opportunity for us to fractionalize the investment and also have our investors follow along with the process. So they do know what's going on in real time with their investment. It's kind of like trading stocks, right? You have an app, it shows you how your stock is performing, what you can expect, the projections, potential exit outcomes, and that's what you get with Belwood Investments in our investor app. Now, the B52 method is our wheelhouse method of investing, which simply means this. Our investors get 50% of the profit for investing 20% of the cost. Now, for those in the real estate and lending world, the cost is the cost of the project, the acquisition, renovations, carrying costs, utilities, insurance, all of that cost bundled into one is what our investors are coming in with, a fraction of that, 20%. So B is simply for Belwood. They're getting 50% of the profit, but our investors are only coming in with 20% of the cost. So if we're buying a house for $500,000 and we're putting $500,000 worth of labor, materials, insurance, everything into it, we have a total project cost of $1 million. Our investors are only coming in with 20% of this, which would be $200,000. So if we have 100 investors, each 100 investors can come in with $2,000, and that would satisfy the 20% percentile of this transaction. So B52, you're getting 50% of the profit for 20% of the cost. The other 80% is sourced through private lenders. So we work with a group of private lenders who lend us money at very competitive rates. And similar to us offering this opportunity to our investors, we also offer it to our lenders as well. And the lender that comes to us with the best terms, the best interest rate, gets the deal. So we're able to always look out for our investors with that respect. Now, the private money lenders, they don't care about our profit. Of course, they do when it comes to running their numbers, but 100% of the profit goes to Belwood and our investors. What they care about is their interest rate and their points and fees. So we can calculate that in our algorithm when we underwrite these properties.
Nice. You're working on some incredible properties, including multiple projects in Malibu. Can you share more about these projects and what has you most excited about them?
Sure. Yes. We did have one fairly significant transaction close late last year, and that was 24844 Malibu Road, previously owned by Kanye West. And that home is built by a famous architect, or designed by a famous architect named Tadao Ando out of Japan. World-renowned architect, still living, but isn't doing any more work, actually. So we have an Ondo, and we purchased it for $21 million. Why this number is significant is that Kanye actually purchased this home for $57 million, and it was originally for sale for $75. So Kanye technically got it for a deal at $57. He did some unique things to this property. He gutted all the plumbing and electrical and had some different views for the property. But the city of Malibu didn't agree with him. So he was red tagged and the project was stalled. And rather than him take it to fruition and bring it back to its former glory, we were able to take it off his hands with the help of my friend and agent, Jason Oppenheim, and Mauricio Umansky. So we were able to work together to buy that from Kanye's team. And again, we bought that for $21 million. We are already in contract to sell it and are closing this month for $30 million. I'd put about $2 million worth of work into it, just to start the plumbing, the electrical, and some framing, which has all been done. And now we have a developer out of Montana who has decided to buy it from us for $30 million. This means our investors will will get a quick ROI, which was projected at over a year return. They'll be getting this in about 7 months with about 25% ROI.
Nice. What are the top 3 things that excite you about the real estate industry today? And then how do you see it evolving over the next 5 to 10 years?
The top 3 things I see that are exciting about real estate is the ability to pivot in a situation. So like I was saying earlier, when we're not able to sell a home, we have the ability to rent it, right? And so that's 2 different opportunities to protect yourself and protect your investors. The second is the ability to scale rather quickly and the ability to make a lot of money. Real estate has been performing year over year, and it's something that we can watch the data and look at this data and really feel more comfortable with it. Yes, there's ups and downs, but it's not linear. It goes up over time. So this is a comforting factor for an investor like myself. I know that this is something I can depend on. Now, if we're in a downward slope, we know that there's only a matter of time before it becomes upward or before it goes upward. But you have to have a mechanism to weather that storm. And so as long as you have measures in place to weather that type of storm, you'll be successful in real estate. I would say that the third thing for me in real estate is the architecture and building component of this. I've always been a fan of beautiful architecture. I've always been a fan of unique buildings and the power that comes with that. So there's a personal joy I get when I see a home being transformed from what it was looking like to what it is now. There's a level of satisfaction there that I think everybody can relate to, and that's why there's 30 different HGTV channels talking about this. I think everybody really enjoys that aspect of it, taking something that's old and in disrepair and turning it into something beautiful and making money doing that. That's it's kind of the American dream, I think.
That's pretty cool. How do you see the real estate sector just changing in the coming years?
Yeah, so great question. Like I said, we have buyers that think it's a buyer's industry, and we have sellers think it's a seller's industry in our market, and they're kind of butting heads. And I would say, this is a natural market cycle. And, we have to continue just to implement our systems and our resources to weather the storm. So right now, it's been slow. It really has. I believe 40% of realtors didn't sell one home last year.
Oh, wow.
Yeah, it's been pretty significant. However, 1 in 5 households have accredited investors. So right now we have people that are ready to invest in real estate, but they just don't have the right company to do it with. And what we see with the markets coming are, one, we do see interest rates dropping in the near future, or this is what has been projected by a lot of scholars recently. There's been some difficulties working with the Fed right now, and Mr. Powell, and I think the executive branch. I think that they're kind of meeting head to head right now. But I'm confident with leadership that um, being in real estate and knowing that all of his constituents are in real estate too. I think he understands that the real estate market is vital to the growth of the United States. And, this is kind of a broad stroke, but, he's a real estate guy, President Trump, and he wants his businesses and his constituents' businesses to thrive. And so I believe that he's aligning all of the right tools to make that happen. But at the end of the day, what he does um, will only be an impact right now. The real estate market has gone through these cycles for the last 100 years. So, it will go up, it will come down, but there is a predictability to the real estate market that we can all count on. The market will crash eventually, that's just the way it does, and the market will come up. That's just what it does. If we look at the data points in California, this is really what I study. What we find is that typically when wages don't keep up with the values of home is when we see the market start to crash. And this typically happens when we reach um, the previous crash highest price point for resale homes or for homes sold in California. So, for example, when the market crashed in 2007, homes median home value in California was right around $550,000.
Okay.
When it crashed before, it was at 225,000. When it crashed before that, it was at 120,000. So when we reach a median value sale price in California somewhere around 1.1 million, theoretically, this is when we would see a market crash. And that's purely based on an affordability index where homeowners or potential buyers just purely cannot buy these homes because they're so expensive. And now there needs to be market adjustments. Now, if people are over leveraged and they cannot sell their home for what they owe, well, then that starts the foreclosure market and, REOs and short sales. So we're not quite there yet. Median value is somewhere around 900,000. So we do have some time to go. But once we get to that 1.1 million or, plus or minus 10%, it will just become so unaffordable for the average person to buy a home in California that there will have to be adjustments on the buyers or on the seller's side. And sometimes sellers are in a pickle where they can't sell the home because they're over leveraged, and that's where the banks come in, start taking these over, and the market will start to adjust downwards.
Do you have any big concerns about the future of the industry?
No, I don't have any big concerns about the future of the industry because this is a cycle that we go through. That's one of the things that's comforting about real estate is that it is something that we can count on to be quite repetitive. You have to arm yourself with the right tools to navigate a downturn market. And frankly, if you can't sell a home, you need to be able to rent the home. If people aren't buying homes, they're renting. People aren't just going to go homeless if they can't afford a home. They go into a rental property. They weather the storm. They wait for rates to go down. They wait for pricing to go down, and then they'll pivot from a rental to a purchase. So as long as we have the ability to buy these homes, and if we are not able to exit them in a sale, that we're able to pivot towards a rental product, which is more attractive in a downturn market.
You know, I often talk about mentorship on this show. Share a story about someone who believed in you early on and then how that helped shape your career.
So I've had a lot of people believe in me and my dreams for real estate. I would say probably the most impactful person has been a good friend of mine. He's a business partner as well. His name is Doug Wirtz. And Doug and he was one of the people that started flipping homes with me when I first started. And he saw something in what I was doing. He saw the fractionalized investment model that I was working with. And introduced his friends and family to it. He had so much faith in our systems where there was nothing to compare it to. There was no other companies flipping homes in the fashion that we were. But he saw the hard work and diligence that I was putting in this, and he had faith in me, and he supported me through that entire process. He's still a dear friend of mine, and we still do a lot of business together. But just him introducing it to his friends really helped propel the business and put Belwood on the map.
You've said that relationships are more valuable than deals, that long term success comes from strong networks and partnerships. Dive deeper into this philosophy and then share how it's impacted your career.
Yeah, so real estate is all about connections. If you don't have the right connections, it can be very difficult and daunting to be successful in this industry, from knowing the right contractors to knowing the right lenders, knowing the right realtors, because there's no real set guidelines for individuals in this industry. A one contractor can charge $1 million for a project, and another contractor can charge 500,000. There's no rule against them, charging more for the same job. Realtors, some realtors overpromise and underdeliver, and then again, some lenders, you would think that they're giving you the lowest interest rate, but they could give you even lower. Or they may be charging you an extra point when they wouldn't need to. So establishing these relationships is what's going to keep these greedy hands out of the cookie jar. So if you don't have the right relationships and you haven't built them, then the likelihood of failure or not as high of ROI is quite likely.
Well, if you could double down on a business decision that you've made in the past or do it entirely differently, what would you choose and why?
I purchased some commercial property not that long ago that had a few restaurants in it. And I'm not a restaurateur, but I thought, well, we own the property. Why don't we give this a shot and and start a restaurant? Now, the restaurant, one of them is extremely successful. The other one is break even, in which we just leased it out to somebody who does, and that is their profession. But I would say, just because you're given an opportunity to explore maybe a different industry, real estate can offer this, right? If you buy a marina, it doesn't mean you should own a yacht club. And that's what I did is it really consumed a lot of my time. Now I'm having to deal with, you know, just people not showing up to work, or, I'm getting reports, there's a lot of workman's comp, people slipping and falling. There's, stuff that people who own restaurants typically would have to deal with. Well, I have so many other things going on, right? I have, $300 million worth of real estate that I'm working with and trying to manage. The last thing I need to worry about is somebody slipping and falling in a kitchen because the French fry, machine had too much oil in it. Like that's like I don't need to be involved with that. And so just because an opportunity presents itself through real estate doesn't mean that you should take advantage of it. So though I do love the restaurant industry, I think it's great. I do appreciate the fact that I have a couple restaurants. This is something that has just taken up some of my time unnecessarily. So pivoting away from that right now currently is saved some time. Also bought a golf course, which, that in and of itself is taken up some of our time. So I would say real estate gives us opportunity, but it can also present some distractions. And keeping focused, keeping aligned with what our wheelhouse product is the most important thing. And that's what I'm refocused on.
That's a good answer. As we wrap up, leave us with some inspiration. What advice or wisdom would you like to share with our listeners who are looking to succeed in real estate or entrepreneurship?
Real estate is something that you can count on. Real estate is something that you can depend on, but you have to have the right mindset and you have to have the right tools at your disposal. Having the right connections is vital. But anybody who wants to get in real estate, all the tools are at your disposal. So if real estate is something that you want to invest in, or if it's something that you want to participate in, this opportunity is available to anybody. You don't have to have a degree. You don't have to have a license to flip homes or to invest in real estate. And even with Belwood, you don't even have to be an accredited investor, though primarily we work with accredited investors. So real estate is for everyone, but not for the faint of heart. So if you're interested in getting involved with real estate, study up and do your homework. And if you do that wisely and correctly, you will be successful.
Well said. Your website, social media, and resources are included in the show notes, making it easy for our audience to connect with you. Bo, thanks so much for sharing your insights today. It was a pleasure.
It's been my pleasure. Thank you for having me.
Thanks for watching. If you enjoyed this episode of Planet Wealth Fortunes of the Brave, check out our other videos for more insights and strategies to elevate your financial freedom. You can subscribe right here and hit that notification bell so you never miss an update. Join our community and take your financial future to the next level. I'll see you in the next video.